And joining me now is Muhammed Wagley from Sasfin Wealth to give us his take on the market's activity. Thank you so much for your time, Muhammed. Yeah, China and the US are meeting in Switzerland this weekend. What's your reading of this big weekend for trade?
Hey Zinati, always a pleasure to be on. Really good to be back on the show. And yeah, some big news coming out this weekend. I think Mr. Besant was relatively optimistic in his assessment. He's looking for a little bit of de-escalation. I think that was the exact word that he used. So I won't really get too ahead of myself. I think that they're going to be sitting at the table is good signs. Where they are right now is just not tenable going forward. So the idea is hopefully we can see them take steps towards, some sort of negotiation, getting on the same page in some way or the other. But I don't think anything sort of defined is going to happen tomorrow or the day after, sort of whenever they're meeting, like what we saw with President Trump and J.D. Vance meeting President Zelensky of Ukraine. It took a little bit of time, I suppose, for them to warm up to him and, actually push through a deal, which looks like, that's really where we are currently, so it's taken a bit of time. I imagine this will be a bit of a slow burner as well, but just really great signs that they're willing to speak to each other.
Yeah, indeed. It's going to be quite interesting to see these two big superpowers with hard heads trying to come to some sort of solution for the trade war that is happening. And talking about trade, China came out with its trade data today for April, and actually imports rose more than expected and imports declined less than expected, which is good news. What story are we seeing here?
I suppose it's a bit of an interesting one. They've been in a bit of flux, I suppose you could say, subsequent to COVID, and it took sort of quite some time for them to recover. There was quite a bit, a lot had been said about the property market collapse and things like that, and they have been struggling to sort of hit those heights that they had been at pre-COVID. Coming off low bases again, which I think perhaps may be a little bit of a theme today. But yeah, I think it can't be argued that they are strengthening somewhat, and to have good data come out just before these talks couldn't be sort of better timed. So yeah, perhaps it may give them a bit of ammunition, but truth be told, I don't think it will change too much.
Yeah, well, good data relative to expectations, because as much as imports declined less than expected, they did decline. And really now zooming into the Chinese consumer, and of course this is another week in which the Chinese government came out with announcements on stimulus measures, but it seems that investors are not as hyped about this stimulus as they were with this kind of almost a bazooka stimulus that came out last year.
No, it's quite interesting, and we're seeing this both sort of inside China with respect to Chinese investors, and we're seeing this sort of externally as well. I think from the perspective of within China, they were quite hurt by the housing market crash over there, and it looks like there hasn't been much of a risk appetite in that sense. And on our end, I suppose, on behalf of the foreign investors looking in, there's always sort of that risk premium that people have been looking to, and maybe because of that, sitting on the sidelines. There's everything that's going on with the trade uncertainty as well. Tariffs gets mentioned on a daily basis, and I think up and until we get a bit of clarity there, I imagine the sitting on the sidelines probably continue.
Well, a lot of companies trying to find clarity and a clear path in terms of leadership. Old Mutual actually had its stock surging about 9% in morning trade, and this is after an announcement of a new CEO designate. Talk to us about this leadership change at Old Mutual, and particularly as it plants itself in the banking sector.
This was quite an interesting one. I think if I was Mr. Stradom, I'd be quite happy with myself. I can't remember the last time I seen a share price move this positively on the back of a new CEO. But when you read more about the process and the man himself, there's a lot of reasons to like this. Mr. Stradom's qualifications are quite extensive, and he's had quite a bit of experience across the board, with financial institutions, insurance companies, and things like that. But I think what was quite interesting to see was that Mr. Williamson, the outgoing CEO, is actually going to be staying on, I think, in an advisory role at least until August. And I think it really sends a message of, the transition period here will be relatively seamless. So it looks like they've gone about it in the right way. It looks like there's we're in line to see a relatively less rocky sort of transition period, and I think there was a lot to like here. So I think he started with a bang. So best of luck to Mr. Stradham. Let's hope this continues.
Yeah. Before we go to the clips, I quickly want to go into Sibanye Stillwater because they released an operational update for the quarter ended March. And surprisingly to me, the share price didn't really move. It didn't trade in the green, even though it seemed that there was an across-the-board improvement in profitability. What did investors take out of that?
No, it's quite interesting. I think to a large extent, I would agree with you.
Yeah.
This is a company coming off a massively low base, and these numbers were quite encouraging. Like they're a diversified miner, but they do have quite a bit of gold exposure. They've got some PGM, some platinum exposure as well, and both those commodities, have been doing relatively well in recent months. And that's actually helped with the numbers. I think you had also mentioned it. We're looking at EBITDA being double relative to this time the previous year. So from that perspective, some really good numbers. But I think, the main takeaway here for me was that, they're restructuring, they're sort of cost-cutting exercises that they'd been looking to undertake is finally starting to form a little bit of fruition here. So that's been quite good to see. And in terms of the outlook, it seemed quite positive as well, in large part thanks to the gold price. So I thought it did paint a relatively rosy picture, given that the share has been beaten down over the past couple of years, and did represent, in my opinion, a step in the right direction. But it could just be that the market remains a little bit skeptical, and we probably need to see a couple of more steps in these directions before we see some exuberant buying going on here. I think it must be a case of that.
Well, talking about buying, let's actually go to the stock picks that have found favor with some of your peers.
It's Caro. So they own, well, we all know their schools that they own. It was a darling for many years. It used to trade on 50 times earnings when it was growing in 2017. Then they split the business. They spun out Stadio and they split. So that's the tertiary side, and then Caro is the education, the school side. And really, in this last set of results, the market got very worried about a slowdown in learner growth. Learner growth was basically flat year on year. And I think that the market got a little bit spooked. I think I think the share was down over 30%, and it's really an overreaction. The business is now trading on 10 times earnings, and this is a business which is very defensive. I mean, people will give up a lot to send their children to a good school, and I think that the learnership numbers will go back to growth as the capacity in the high school gets filled. I think that the top line can grow 7%. They can keep their costs under control. They can increase margins slightly, and over time, the return on equity and the return on assets will improve, and then the re-rating will come back. So I think that this business can grow earnings in double digits. I think you're going to eventually get a 4% dividend return, and I think it should trade on about a 15 times earnings. So that gives you kind of a 20% a year return.
Steve Madden of those, the Wolf of Wall Street fans will remember Steve Madden as well. But it's a business whose share price has been pummeled as a result of the tariffs that have been introduced. Steve Madden has been as one of the companies that was heavily exposed to China for the production of its products. Pre-Trump's first tariffs in 2018, it made 94% of its products in China. After those first tariffs, it brought it down to 77%, but the market was still very spooked by the introduction of tariffs early last month. And so it sent the share price down about 60% from its peak last year. And now it's still trading at half of its peak price last year. Very attractive. It's still run by its founder. It is a low-cost producer. It always finds the lowest cost manufacturing sites around the world. Its advantage over other players is it is able to move its production quickly out of China. So they plan to have their production down in China down to about 43% of the total group production by the end of this year.
All right, Muhammad, I think we have maybe 1 minute for both of those, Kuro and Steve Madden. Of course, the other analysts also had a lot to say about those. But let's start off with Kuro that had a lot of investors spooked about a few weeks or a month ago.
Yeah, so look, I take the analyst's point there just in relation to learner growth, because if I remember correctly, it looked like whatever growth that they did see was mostly inflationary, right?
Yeah.
So I think the point that I believe his name is Mark. I
Yes,
think
Mark.
the point that he was making was that the share falling sort of was overdone, and from a value perspective, it's at low basis and could represent, a good sort of punt. And I think that's quite fair, truth be told. It's one that I like. And then Steve Madden, Zinati, I'll note that you cut out your lovely joke there, the heel dog, which I quite enjoyed, I must say. But it's quite interesting is Steve Madden. I think this was actually flagged to me on business day. And funny enough, I think the last time I was on, it was also a Benguela analyst who had mentioned it. So it seems like they're onto something with this. I quite look, 94% production in China probably would have been one of the reasons why it wasn't flagged. But it sounds like they're pivoting away from that, and that's quite promising, from 90% to about 40% is quite a big move there. So I think from a technical perspective, it did look quite interesting to me, but this is one that I'd like to do a little bit of homework on. It looks quite interesting. I think I'll keep a closer eye going forward.
Right, we'll dig our heels into that. Well, let's get to your stock picks. Your stock pick for today, Muhammad, what are you choosing?
So this is one that I follow quite closely. I'm going to go with the digital advertising company, The Trade Desk. Very simply put, I always sort of explain it, in a nutshell, think about a stock exchange, but instead of buying shares, you're buying ad space, so they're very savvy company, very technologically advanced. And, there's a lot to like here. They position themselves as an alternative to Google and Facebook, where, if you want to advertise there, you pay the price that they ask. And these guys represent an alternative to that. There's lots of companies in the space, but they're by far the biggest one. They just come out with earnings last night, and really they were quite stellar. And they had some issues in the previous quarter just about in relation to the rollout of their new platform, but it really seems like they're back on track. From a valuation perspective, this is one of those that's always going to be a little bit expensive, but if you look at it relative to where it's been trading, generally speaking, there is a bit of value there. And I think around 65 bucks a share, it may be a decent entry point. It's one that I quite like and would look at getting at these levels.
All right. Well, thank you so much for your time and for your analysis on what has moved investors' money today and this week, Muhammad. That was Muhammed Wagley from Sasfin Wealth.